Michael Every of Rabobank joins us on the phone line from Hong Kong for a quick perspective as well. Michael, good having you. Good morning. Thanks for joining in and speaking to us at Bloomberg Quint India. Would you reckon that global markets are likely to drift lower in light of the developments that have happened over the last 2 days?
Well, I think at the moment they're going to get a completely artificial and rather typically moronic lift from the fact that, Trump is quoted in a longer passage by a journalist saying that he's got a feeling that the trade talks are going to be very successful, which is, utterly delusional when you take it in the broader context of China absolutely doubling down and saying, here are our red lines and we will not blink. And the US saying, here are our red lines and we will not blink. And the two red lines are in completely different places. But nonetheless, the market still doesn't want to accept the fact that we're in that position where irresistible force meets immovable object, and they're looking to seize on any possible positive headline they can. And I would imagine that one may give a partial lift today, at least in the short term, until the underlying reality I just alluded to comes biting back again.
According to you, Michael, is this, while currently this bit of news on trade wars is the epicenter of the cause of what we've been seeing in terms of the market drift lower, is this the only factor that the markets are going to keep an eye out on? I mean, there are various other aspects like what the Fed has been doing, and the earnings growth out there, as well as what we've been seeing in terms of the economic turnaround. What have you been watching out for, and what do you think will be the focus for the market over the coming few weeks?
Well, if I understand your question correctly, yes, this is an enormously important thing to focus on, but it's a multifaceted thing to focus on. I mean, for example, the situation that's going on in Iran is not entirely unrelated to this. So, what you have broadly is a U.S. economy which is pushing back against any number of what it sees as foes, be that economic or geopolitical or ideological, and China bestrides a few of those different descriptions, as does Iran. And it's looking for where it can push back against all of them simultaneously. And all of those enemies are also looking back and thinking, how can they stop the US doing it? And that particular great game, if you will, is all that really matters to me personally in terms of looking where markets are going to be going. But most people in the markets refuse to accept that reality and continue to focus on utter trivialities. And so the markets in the short term don't necessarily respond to those underlying dynamics. Eventually they will, of course, but not necessarily in the short term.
Well, you're using fairly strong terms, and therefore I'm just asking one final question from mine at least. 2 months of positive tweets and positive comments from the Chinese side ended up in the start of what people say is a trade war. Would you reckon that people, or market men at least, would want to see evidence of a pullback from the either side before they believe that there will be a resolution, or will they be happy with tweets from Donald Trump or positive statements alone?
Oh, they'll be happy with the tweets alone, I would think, even if they're gradually becoming more cynical. I mean, Moody's, for example, the ratings agency, has just come out and said that a trade deal will be done eventually. I mean, I have no idea what particular fevered imagination is coming up with that particular view within Moody's, other than the fact that it's written by economists who simply don't understand what power is and what politics is, and don't understand that, it would have been entirely economically rational for the Soviet Union and the US to have been huge trade partners, but they weren't, because politically they hated each other. So, for people who don't understand anything that happened before 1989 or 1991, then possibly that particular view makes sense. If you've ever read any history, you'll see that it doesn't. But the market is largely at the moment driven by people who haven't read any history. And so they will be clinging to positivity and more in denial about negativity. But, my view, as you can hear from the very strong statements I'm making, is that negativity and history will out in the long run.
All right, Michael, thank you so very much. Really appreciate it. And thanks for putting out those thoughts in such a candid way. Michael Every there of Rabobank with his views on what's been happening with regards to the trade talks.